Let's start there. That's a big talking point for both economies, actually. Where do you think the US and Canada can work closely together beyond 24?
Well, you start with the history. I mean, the longest undefended border. You look at the trade, balanced trade, over $400 billion crossing the border each way every year. 34 states in the U.S., Canada's the #1 trading partner. You take out energy, the U.S. exports more goods and services to Canada than Canada exports the other way. Energy exports from Canada kind of balance that trade. So you look at this long-standing relationship, you look at supply chains that are integrated, very, very important. But the message is, Canada has a challenge and America has an opportunity. And I think that's the key message. For Canada, we have to put a business lens on our economy. And we have to think about how do we become more relevant to the largest economy in the world, fastest growing economy in the world. And if you put a business lens on that, you'll look at what you're good at and what America needs. And Canada needs to do a better job of aligning to what America needs. America needs Canada to produce more energy, not only for America, but for its key trade partners as well globally. America needs Canada to be more involved in overall security. Canada can play a much bigger role in the Arctic, growing area, trade area, resources, minerals, all of that. So when you think about the relevance of our economies, the integration of our supply chains, the natural resources we have, the people resources we have, America can't go it alone because it's challenged in meeting the demand of its economy from a human resource perspective, from a minerals perspective, and therefore Canada can help tame inflation in America.
I'll try and be diplomatic about this. How big is the spread between everything you said, which just made sense, and the policies coming out of current administrations, both north of the border and south of the border?
Look, America will choose who they want to run their country. At the end of the day, there's some common policy issues I think any government in the United States, and equally any government in Canada as we go through a similar election next year. First and foremost, a fiscal deficit. We will not enjoy long-term prosperity unless we get control of our fiscal deficit. And therefore, as we look at the policies, whatever party they're coming from, we have to manage this fiscal deficit. We've already talked this morning on your show about markets trying to digest the amount of debt coming through. How are we going to price that debt? How are we going to float that debt? We have to get control of these deficits. We don't need that stimulus in the economy right now. The economy is strong. And therefore, lower rates will stimulate further business investment. So I think from that perspective, we're looking for policy that really aims at stabilizing and reducing that deficit, I think, is really important. So regardless of who's in power, we need that policy change.
But how desperate is the business community, especially in a place like Canada, for policy that they know is going to stick? You're talking about energy, and my mind immediately goes to Keystone, right? 3 administrations, start and go, of this one project with executive orders. Why would any business in Canada want to make decisions about doing business in America?
I think you look at the history, that was one project exactly, and I think everyone's disappointed that we weren't able to conclude that project, even though it was so close to coming online. At the end of the day, we still have the capacity to export to the United States. We're exporting in Canada to new markets. Trans Mountain Pipeline was completed, and therefore we're exporting to Asia increasingly. That helps America as well. At the end of the day, if we can secure energy security for all trading partners, I think that's a big part. So Canada can play a role, even though pipelines aren't being built directly to the United States. We can help trading partners, whether it's in Japan, whether it's in South Korea, and others who have an energy need for their growing economies. So there's roles we can play. We're going to go through bumps through the road. This is a long-standing relationship, Anne-Marie, as you know, and therefore we will overcome any obstacles. We have to work together, and I think integrating supply chains, leveraging those resources, you have to think about who you're aligned to from an ideology perspective. I think the democratic process and our belief in democracy, and therefore that long-standing partnership, I think, can flourish to the benefit of both sides.
How are you looking at trade under Harris and Trump? Because regardless of who wins, there's going to be this review of USMCA.
I think at the end of the day, when the facts are put on the table in 34 states, many of them red states, many of them blue states, they look at Canada, their #1 trade partner. You look at the long-standing relationship. We're going to have disagreements, I think, at the fringe, the way we did last time. I think milk in Wisconsin was an area of disagreement. There's going to be areas of disagreement. At the core, I think we see the benefit to both nations, and therefore I think we have to keep that front and center. In business, myself as a leader in Canada and a very large US operation, we as business leaders have to keep the strengths and the need for this at the core. And I think we'll argue at the fringe, hopefully, and resolve those, but at the core, we know how important this is.
How much are you yourself planning to continue the expansion in the US, or is that pretty much done?
No, thank you for asking that. We have a fantastic U.S. operation, a top 10 capital markets player, number 6 in wealth distribution. We have a commercial bank and a private bank with City National, and therefore we very much believe we're serving America, and particularly through our capital markets operation, large corporate and institutional. We're serving high net worth and ultra high net worth individuals for the wealth. We're growing each franchise, whether it's the number of investment bankers we hire, the number of traders we hire, the amount of balance sheet we put into the United States continues to grow. We put a significant amount of our balance sheet into the U.S. We're growing our commercial operations into mid-corporate. And then to your question, Lisa, north-south connectivity. We bank companies on both sides of the border. We understand the needs of the supply chains that are integrated, and therefore we're continuing to build out greater transaction banking and treasury management north-south to help growth in both economies. So we're investing in America, and we call it our second home market.
So to me, this is fascinating because you really understand the cross-border connection for a lot of companies. And I do wonder how much hesitation there is for companies to lean into some of their expansion cross borders, given the uncertainty in policy that we see. Do you see that in practice, or is it the opposite?
No, we do see it in practice. Uncertainty in any outcome for businesses. We see it right now, obviously, in capital markets. There's a lot of dialogue, but we haven't seen the pipelines come to fruition. We see it in cross-border clients where you're thinking about making a 10 or 20 investment. You need to know the rules around those returns, and therefore you're hesitating a little bit. You want to see the policy in action. And therefore, I think as businesses, we have to keep advocating for balanced policies that meet the needs of everyone. I mean, we're really looking at, in many ways, a K-shaped economy. You see it in some of your discussion already today. Businesses and large corporates are feeling a little bit better about things. They're starting to get ready to move forward, but to your point, they're looking and they're hesitating a little bit at the margin. Small businesses are really struggling with inflation and supply chain, and therefore you're seeing a different perspective on investing between large corporates and small corporates. You're seeing the same thing on consumers. The top 20% of U.S. consumers are driving the economy. 40% of U.S. dollar consumer spending comes from the top 20% of consumers. Bottom 60% of consumers income-wise are struggling to make ends meet and aren't driving the economy.
Can you give us a sense of how much you expect transactions and other types of investments to come back online after the election, regardless of who wins? Can you give a sense of what kind of volume could get generated after there is some degree of certainty, whenever that may be?
Right. So you're seeing the fee revenue in the pools was up 20%. You're seeing capital markets, M&A advisory pipelines build. We're seeing that in our own pipeline. We're feeling good about that. You're seeing more debt capital markets activity as lower rates trigger that. So it's a combination of lower rates, pent-up demand from sponsors and trying to move some of the properties they've been sitting on since the pandemic. So you see this pent-up need. You're seeing the rate environment being more constructive. You see the uncertainty of the election slowing things down, but you see the pipeline moving slowly through the process, and therefore it portends to an active year in 2025.
Got to squeeze this in with 60 seconds left.
Yeah.
How's the housing market in Canada since we last spoke? What's it looking like?
The housing market's stable. Housing's driven by demand. Certainly construction is way off given interest rates, so listing ratios are going up. You're seeing slow resale activity. You're seeing slow construction activity. But that demand, given the amount of immigration we have, pent-up demand, so you're still, Jonathan, in a situation of excess demand over supply. We are short 3 million houses in Canada. We're building roughly 250 to 300,000 houses a year. We have a 10-year backlog on supply, and we're more concerned about how fast we're going to build. Therefore, that lends to stability in prices over time, even when demand drops.